Today, we're performing a fundamental stock analysis of SM Energy Company, ticker symbol SM. So SM Energy is currently trading for $25.32 per share. Over the last year, their stock price is down 34.5%. So the business has been declining faster than the overall market. We're looking at the company to try to understand, what are we missing? What could the market have discovered about this business that's led to this underperformance? And is there the potential for some hidden value in the company? So over the last 5 years, SM Energy's stock price is compounding at a rate of 8% annually. The company is up 50% overall. Since the business's lows in October of 2020, the company is up more than 15 times, even counting their declines over the last year. Over the last 10 years, SM Energy's stock price has been cut in half. Going back prior to the global financial crisis, it's been somewhat of a roller coaster for SM Energy. Their stock price is up 20% overall, meaning that they've compounded at a rate of about 1% annually. Keep in mind that the company does pay out dividends, and currently they have a 1.22% dividend yield, so this would be slightly below the yield that you'd be receiving from an S&P 500 ETF currently. SM Energy is trading just above their 52-week lows, and they've been cut by more than 40% from their 52-week highs. The business has some short interest around it, with about 5% of their shares outstanding currently sold short, and SM Energy has about a $3 billion market cap. For more background about the business, SM Energy is an independent energy company engaged in the acquisition, exploration, development, and production of crude oil and condensate, natural gas, and natural gas liquids. Operating primarily out of the United States, the company actively participates in joint ventures, prospects/leaseholds, and drill-to-earn opportunities. The majority of the company's revenue is derived from some of the United States' premier drilling locations. Drilling location interests have been traditionally obtained through oil and gas leases from third parties. SM Energy relies on its fleet of geologists, geophysicists, landmen, and engineers to help extract the full potential out of all properties held. As of February of 2022, the company had 492 million barrels of oil equivalent of estimated proven reserves. It also had working interest in 825 gross productive wells and 483 gross productive gas wells in the Midland Basin in South Texas. The company was formerly known as St. Mary Land and Exploration Company and changed its name to SM Energy in May of 2010. SM Energy was founded in 1908, and even though its operations are in Texas, it's headquartered in Denver, Colorado. We're performing the Select 6 analysis today, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of SM Energy based off of their business fundamentals. We'll also be coming to a rating to help determine whether it's worth your time and energy to dig in and learn more about the company. So this analysis is still a work in progress, and it's an opportunity to learn in public, so it will continue to improve and get better over time. Starting things off with metric number 1, we want their average return on capital over the past 5 years to be above 14%. And there are 2 key reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. And the second is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business will return. And these business returns will be captured here by return on capital. So by looking for a benchmark of 14% or higher, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. So SM Energy as an independent oil business is going to see its returns on capital fluctuate with the price of oil. The oil exploration and production business is a cyclical industry, prone to boom and bust cycles that will fluctuate with the pricing of oil. So it's not surprising that in 2020, when the price of oil went negative, this business also had negative returns on capital. And since then, as the price of oil has increased, this business's returns on capital have also increased. In their most recent fiscal year, the company earned 32% return on capital. Averaged out over these last 5 years, however, the business earns about 3.5% average returns on capital. That's coming in at about half the rate of a typical business, and so this is an X here on metric number 1. Although this may not be as much of a reliable data point as it would be for some other types of businesses due to the high cyclicality of this business, and it's significantly above average returns on capital in their most recent fiscal year. Next, for metric number 2, we're taking a high-level overview of the growth of their business, so we're looking for revenue, net income, and free cash flow growth over the last 5 years. This metric will be all or nothing in nature. Either all 3 of these will be up for this to be a check, or if even one of these is down, this entire metric will be an X. Over this time frame, their revenues have just about doubled, their earnings have more than doubled, and their free cash flows have gone from being negative in fiscal 2018 and 2019 to they've been positive over the last 3 years, and they're very positive today. One thing to note here is that the company had a big loss in their net incomes in 2020. That was really because of a large impairment of oil, gas, and mineral properties. So they took a $1 billion impairment there, which was a very large impairment relative to the scope of their business. So that may be something you'd want to dig in and learn more about. Regardless, because all three of these are up, this is a check here on metric number 2. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in SM Energy by looking at the company on a per share basis. So we're looking for earnings per share growth over the past 5 years for the business. As we just learned, their earnings have more than doubled, but we also want to look at what they've done in terms of their shares outstanding. SM Energy has diluted existing shareholders by about 9% over these last 5 years. So while this isn't as dramatic as the dilution from some other types of businesses, this may be something that you would want to dig in and learn more about, as ideally we don't want businesses diluting shareholders at all. It's also possible that the business was issuing shares to make acquisitions over this time frame, so that would be something that you would want to dig into here as well. But ideally, we want a company to be either keeping their shares outstanding flat, or better yet, buying back their shares when their shares are trading for below what a potential intrinsic value for the business is, and it looks like an attractive use of the company's capital relative to some of their other opportunities. Even with their shareholder dilution, this is going to be a check here on metric number 3. Next, for metric number 4, we're looking for free cash flow per share growth over the last 5 years. As their free cash flows have gone from being negative to being positive, even with the shareholder dilution, this is a check here on metric number 4. Their free cash flow growth, even since they've started producing free cash flows, has outpaced their shareholder dilution. And so far through our first 4 metrics, recapping where we stand currently, SM Energy has 3 checks and only 1 X. Then for metric number 5, here we're evaluating how the business is using debt. So we don't want to be investing in overly levered businesses, because during economic downturns, it's overly levered businesses that are likely at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow that the business has produced over their last 5 years. So SM Energy has reduced their net debt position throughout this time frame. They've cut this in half within their last 4 years, and currently they have just over $1.1 billion worth of net debt. In their most recent fiscal year, the company produced $806 million worth of free cash flow. They'd be able to pay off all of their net debt with only 1.5 years of their current free cash flows. But as we average out how the company has consumed or generated cash throughout this time frame, the business has only produced about $716 million of free cash flow net. And so unfortunately, this means that this is an X here on metric number 5. Again, this is likely not as strong of an indication here that SM Energy would be overly levered, especially because their current free cash flows look so strong relative to their net debt position. And so this may not be as concerning as it would be potentially for some other types of businesses. But either way, it does highlight the cyclicality of the business they're in. And so it may be something that you would want to dig into and learn more about, especially as to why the business would have such high levels of net debt when they were consuming so much free cash flow in some of these prior years. Then the big metric of them all, metric number 6, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this may offer a slight risk premium to the yield of the 10-year treasury, and it may offer a potential starting point for evaluation of the business. So SM Energy currently has a $4.2 billion total enterprise value. We're using their enterprise value because it takes into account both their market cap and their net debt position, so it'll give us a perspective of the business that's more similar to as if SM Energy were a private company. Before we dig into where the business was at historically, we want to look at where they're at currently. In their most recent fiscal year, SM Energy produced $806 million worth of free cash flow. So to get a current free cash flow to enterprise value yield for the business, when we divide their $806 million of their last 12 months of free cash flow by their $4.2 billion total enterprise value, that gives us about a 19% current free cash flow to enterprise value yield for the business, meaning that the company's free cash flow yield is about a fifth of their total enterprise value. And so this is significantly above that risk premium we were looking for. However, we still want to look at where the company has been at historically to take that more long-term perspective of the business. As we learned in the past 5 years, SM Energy has produced $716 million worth of free cash flow, meaning that in an average year, the business produces about $143 million worth of free cash flow. So when we divide their $143 million of their average free cash flow by their $4.2 billion total enterprise value, that gives us only a 3.4% average free cash flow to enterprise value yield for the company. So that's just slightly below the yield of the 10-year treasury, and that's also below that 5% risk premium. So while we are split on an average and a current basis of their free cash flow to enterprise value yields here, because their average yield is below that risk premium we'd be looking for, this is an X on metric number 6. Keep in mind though that this business does look very interesting currently, and that this is not a buy or sell recommendation of any security. While these metrics are simple, when they're combined combined together, they can be very powerful. Before giving a rating to this business, we'll want to get a more concrete estimate of SM Energy's intrinsic value, which we'll do through our discounted cash flow analysis, but we need to cover a bonus metric first. So as our bonus, here we're looking at SM Energy's dividend profile. So SM Energy currently has a 1.22% dividend yield, which is below the dividend yield that you'd be receiving from an S&P 500 ETF. For SM Energy, we want their dividends to be supported by their cash flows, and that's been the case in 3 of these 5 years. The business did pay out dividends while they had negative free cash flows in 2018 and 2019. That's a potentially controversial capital allocation decision. The business slashed its dividend for their payments in 2020 and 2021 as well, although the business has been massively cash flow generative since 2020 in these 3 subsequent years, and they've maintained a very small dividend payout ratio while having this modest dividend yield. So it does look like their dividend has been very well supported by their cash flows since 2020. And to get a better understanding of management's approach to capital allocation, you would want to dig in and read through their filings. You can read through their 10Ks, or you can read through some of their recent earnings call transcripts to get a better understanding of management's perspective here. As promised, everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze SM Energy, which takes us on to using a discounted cash flow model to come to a potential fair intrinsic value for SM Energy. So a discounted cash flow model is just like any other model in any other discipline. Its outputs will be sensitive to its inputs. So SM Energy right off the bat is going to have a level of business predictability that's much lower than some other types of businesses due to the cyclical nature of this business and how it's prone to boom and bust cycles. We're going to try to account for some of this in our assumptions here, but it's up to you to determine whether or not these assumptions will be accurate and applicable going forward to give us a baseline projected estimate for SM Energy. If we start with the business's average free cash flows over their past 3 years, where they've been cash flow positive in all 3 of these years, then using historical growth assumptions for how the business has grown in the past 20 years or so, if we assume that their average free cash flows decline at a rate of 4% annually for the next 10 years, and then during the 10 years out after that, that these average free cash flows would decline at a rate of 8% annually, then adding in the company's tangible book value, which gives us an approximation of their tangible net worth per share. If we are seeking a 15% rate of return from SM Energy, which is the rate of return Warren Buffett's looking for from his investment decisions, in addition to his margin of safety requirements, then it looks like at today's valuations of SM Energy that a potential fair intrinsic value for the business is right around $45 per share. So that would be significantly above what the company's current stock price is. That would be nearly doubling their current stock price, up by about $20. However, be mindful of the nature of this business and its low predictability. Also be aware that this 15% rate of return would not be doubly counting their dividends and that their dividend yield would be included in this. It's very important that you be mindful of the fact that this type of analysis is not financial advice. It isn't a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. Now it's time for a rating of the business. So SM Energy has produced very high returns on capital in their most recent fiscal year, but on average, the company earns less than half of the returns on capital of a typical business. They've grown their revenues, net incomes, and free cash flows very strongly in the past 5 years. They have diluted existing shareholders by about 9%, however, but they've still grown on a per share basis. On an average basis of their cash flows, it doesn't look like they'd be able to support their debt position. However, that doesn't seem like it's as much of a concern when we look at their most recent several years of free cash flow, and especially their current free cash flows. That was a similar situation when we looked at their current and their average free cash flow to their enterprise value yield and compared that to the yield of the 10-year treasury. It looks like the business may be potentially very attractive on a current basis, but the cyclical nature of this business is shining through. That again was the case looking at their dividend profile, where in the past 3 years, they've had a modest dividend payout ratio and a modest dividend yield after cutting their dividends in 2020. Finally, performing a discounted cash flow analysis. If you've done the work and you believe those historical growth assumptions will be accurate for the business, then if you are seeking a 15% rate of return at today's valuations of SM Energy, a potential fair intrinsic value for the business is right around $45 per share. Keep in mind again, the business's low business predictability. So with all of these factors and SM Energy checking the box on 3 of our 6 metrics today, it looks like the company is a moderate candidate in terms of its attractiveness for further research. So it's worth reiterating that this analysis is not financial financial advice. It's not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with your financial advisor. By their very nature, cyclical businesses and cyclical industries are going to be more difficult to pin down an estimate for their intrinsic value than some other types of companies. So it's really worth digging in and learning more if you're potentially interested in this business. So with that said, that's today's fundamental stock analysis of SM Energy Company, ticker symbol SM. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about SM Energy with me, and have a great day.